and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends and most importantly, your queries during the show. So guys, keep commenting on our live feed and we'll have it addressed by our guest on the show. But before bringing him on board, let's see what the global handover looks like. Wall Street closed in the green with moderate gains across the three benchmark indices. Stock futures inch higher overnight as the investors are bracing themselves for Federal Reserve's big interest rate decision. The Fed is widely expected to hike rates by about half a percentage point. European markets, meanwhile, closed mostly higher on Tuesday, attempting to claw back Monday's sharp losses. Stock 600 closed about half a percent higher, with oil and gas shares adding over 4% to lead the gains as most sectors and major bourses finished in the positive. Asian markets right now trading mixed ahead of the FOMC meet outcome. Back home, if you look at it, Nifty managed to stay just above 17,000 and Sensex just below that 57,000 mark. SGX Nifty is indicating to a muted open for us. We're keeping a close watch today on Tata Group heavyweights, Tata Steel, Titan and Tata Consumer. There's also Kotak Mahindra Bank, another blue chip company to keep an eye on ahead of its results today. And the most trending topic right now, the behemoth LIC IPO. Everything you need to know before opting to subscribe. Let's get started with technicals first. Gaurav Bissa joins us from Trustline Securities. Gaurav, good morning and thank you for joining in.
Hi, good morning. How are you?
Very well, thank you. Lots to watch out for today. LIC IPO, FOMC meet outcome and of course our own markets right now. Largely, it's been a range-bound trade for both the benchmark indices. Tell us, which way do you think it's going to be heading today?
Well, it's very difficult to pinpoint. If you look at the last 2 weeks, at least, we have been trading in a range of 16,800, 850 on the lower end, 17,250 on the higher end. And we have seen a lot of news flow coming, the quarterly numbers coming in, the global and domestic factors also pitching in. But we have not seen break of this range. And as long as we don't see a breakout, I think it's futile to actually try to identify where or preempt where it can actually head for a breakout. In such times, what one should be looking is buy near the low point of the range. Like in the previous session, we dipped towards the level of 16,950 or on those levels. So that would have been a good level to buy. If today or in coming days, if we see a dip towards 16,900, 950, one can keep 100 point stop loss and buy for targets of 17,200. On the other hand, 17,250, where 55 and 89 exponential moving average hurdles are placed over there. Any rise towards those levels and rejection coming at those levels can be utilized to create fresh shorts. So I would say don't attempt to try to pinpoint where it will actually head. Rather play for a range. Once there's a breakout, then play on that particular side. Till then, be stuck this week. That is the way going forward.
Okay, well, that's prudent advice. I hope our viewers are taking note of that. Lots of queries trickling in, which we will come to. But first, let's talk about the big things that we want to focus on today, the stocks to watch out for. First up will be Kotak Mahindra Bank, of course. They will be delivering their Q4 numbers. NIMs expected to remain steady. Bottom line also we're expecting to be strong, primarily on the back of falling provisions. But talk to us about technicals. Kotak Mahindra Bank, is it something you like, especially now that there is, the earnings to watch out for as well? If one wants to buy today or in the coming few days, do you think it's a good call?
Well, there's one interesting aspect. If you look at the daily chart, if you look at the 2-hourly chart, there's a triangle formation that is happening. It's yet to see a breakout. But once it trades above levels of 1800, I think with a stop loss of around 1750, 1755, one can buy for target price of 1920, 1930. So I'll wait for a breakout. It's still in the consolidation phase. Let it come out of the consolidation. I think then it will make more sense to be long than in.
Okay, all right. Moving on then to Tata Group companies. We're in the thick of the earnings, of course. All of them are delivering their Q4 report card back to back. Last night, it was Tata Steel. PAT was up a solid 37%. They beat street estimates by quite a margin there. They've also announced a stock split of 10:1. So stock split is also something that, the street will be factoring in today when it comes to this particular counter. Right now, it's perched just below that 1300 mark, Gaurav. And metal stocks largely have been very solid performers year to date, but last few months have been a tad quiet. Given the run-up that has already played out in metal prices, and now that we're witnessing some consolidation there, what do you think of for Tata Steel on the technicals front?
Well, if you look at the daily charts, stuck like you mentioned, it's stuck in the range, and I'll say that's actually an outperform by the virtue of not falling in such markets. The metal space overall has been outperforming, I would say, on a relative basis. But if you look at on the individual basis, Tata Steel, I don't see a trade as of now because if you look at the daily charts, the supports are placed at levels of 1240. The resistances are placed at levels of 1370, stuck in the range, so it's not a trade for me.
Okay, all right. In fact, our viewers also were keen on asking you today about Tata Steel. Definitely a very important blue chip company to keep on your radar. They delivered their numbers yesterday, and Titan as well on Tuesday, on Monday, just before the day ended. They also handed in their report card. Largely a weak set, I would say. There was a 7.5% dip in the profits. Lots of fundamental, lots of headwinds playing out there. There were partial lockdowns. There's volatility in gold prices, geopolitical uncertainties. Demand has been largely volatile again. It has seen its bouts of strong demand in the last few months owing to weddings, etc. But largely, I would say a muted set by Titan. What about the technicals? Clearly, the stock has done well for its investors over the longer haul, but it's been very sluggish in the last 4 or 5 months. It's been trading in that plus minus 5% range. Do you see any meaningful action coming by anytime soon there?
Well, yes, in this particular case, it has given a breakdown. If you look at the daily charts, there's a rising trend line breakdown that we have seen, and that happened on Monday's trade. And you can expect the immediate fall towards the level of 2300 to 2250. That is the range where it may try to see some stability. But for now, the structure remains weak. I don't know how it will move based on the quarterly numbers. But yes, if you look at purely on technical part, it has fallen on volumes, given breakdown on volumes. So in all likelihood, based on technicals, we can see a dip towards the level of 2300.
Okay. And finally, the last Tata stock that we want you to address, Tata Consumer. Today, the numbers will be out, and the market is expecting a good set of earnings this time around. PAT is likely to more than double. Operating profit is expected to come in very, very high, in high 3 digits actually, according to street estimates. But the move on the charts has been relatively muted. In fact, that's been the case for many FMCG players right now in the recent past. 1 month, about 4.5% higher for Tata Consumer. 823 rupees is where it's last shut. But tell us how is your reading about Tata Consumer?
This looks relatively fine if you look at the hourly charts, because on daily charts, it's given a small breakout, but that happened earlier. If one wants to play at this stage, I would recommend looking at the hourly charts. It gave a triangle breakout. It made a small retest of a triangle breakout, and we have seen a spike sort of coming in. So as long as it is trading above levels of 795, 800, the bias will be positive. Hourly close above 840 can push it towards the level of 900. So the structure remains positive, and I feel this is one that can see some out of outperformance going ahead.
Okay. Gaurav, I'd like you to stay on with us because, one of the biggest and recurring queries that we're getting on our feed today is about the LIC IPO. There's Rajveer Singh who is writing to us right now. In fact, we had an earlier query as well, Satyanarayan. And they want to know whether LIC is a good choice to invest in when it comes out with an IPO. We'll address that with my colleague Neha Dave, who tracks the space very closely, the entire BFSI space, and she has done some very interesting reports for LIC, for MC Pro as well. Neha, thanks for joining in. I'm sure everybody around you must be asking you this question. Is it a good idea to invest in LIC IPO? Tell us, what have you been telling them all this while?
So yeah, LIC's IPO is one of the biggest IPO that India's capital market has ever seen. And LIC being the size it is, considering its heft, considering the sectoral tailwinds in the insurance space. There is a huge underpenetration in terms of the protection business. It's glaring, and the protection gap in India is as high as 83%, which is the highest among the Asia Pac countries. And the most importantly is the valuation of the company. It is priced at around 1.1 times its embedded value as of September 21, which is over 50% discount to the average valuation of the three listed private players. Now, this is very attractive proposition, and this should translate into listing gains as well as a long-term value creation for the investors. So obviously, LIC's IPO is something that investors should go for. Having said that, there are certain issues, that is being often talked about LIC's business. It ranges from potential government interference, slow technology adoption, or stiff competition from the private players. But the business strengths of LIC far outweighs these concerns, and hence investors should go for it.
Okay. But what about valuations? Because, I was reading your report as well. It says many hits and a few misses. But talk to us about a big point, which is about the valuations, and it's trading at a significant discount to its private peers, despite being such a behemoth player, despite being a leader in many segments. Why the discount? And can you also tell us how the other players and what levels are they trading at, the private sector players?
Yes. So LIC's IPO is being valued at a discount. And one of the key reasons for that would be the lower VNB, or the value of new business margins of LIC. Now, VNB margins for LIC is at around 9.3%, and for listed private players, it is about 20%. This could be one of the important reasons, because for a life insurance company, VNB is equivalent to EPS, and it's a most important metric to look at the profitability of a life insurance company.
Okay.
Having said that, there is a huge scope of improvement in this VNB margins going forward. A slight shift in the product mix in favor of high margin protection business can push the VNB margins of LIC to high teens. And this is something to look forward to, and there is a scope of improvement. So this is one of the reasons why it is priced at a discount to private players. Another reason could be the global comparison, which LIC chairman also alluded in the analyst meet. And especially if you look at the Asian players, the leading Chinese insurance companies like Ping An and China Life Insurance companies, their market capitalization is lower as compared to embedded value. But if you look at their market share, both of them has a market share of around 20%. And now if you compare it to LIC, LIC's market position is unparalleled. Its market share is as high as 9 times that of the second largest player. And this is nowhere the case in the world. So, LIC should command a valuation premium as compared to the global peers. So, going forward, there is a huge scope of improvement in terms of margins, and the valuation can see improvement. Also, another point that I would like to say is that the VNB margins which are reported currently, that is as per the current profit sharing arrangement with the policy holders. Now, as we know that this is likely to change gradually till FY25, so VNB margins automatically will improve to double digit going forward.
Neha, by the looks of what it is and what you're also telling us, there's going to be a huge appetite for this IPO. But let's say for people, for investors, especially retail investors who do not get an allotment in the IPO, can they look at any other peers in the listed space when it comes to insurance, or should they try and buy LIC on the listing day?
So yeah, that depends on how much listing gains are there on the day one. Okay, so if at all there is a muted listing, investors should definitely go for it for long-term value accretion. However, if there is a huge listing gains, there are other plays which are available, and we have been talking about ICICI Prudential for a long time, and it is something which is trading at a lower valuation as compared to both HDFC Life and SBI Life. And again, it's a great story because their VNB is likely to double as per the management guidance, and they have shown a huge business transformation in the last 4 years. So that is one stock which investors should keep on their radar.
Okay. Neha, great chatting with you, and thanks for getting the details ahead of the big day. All our viewers definitely would want to in fact, they did want to know about this, and I'm sure they have more clarity now that you've joined us and told us all about the LIC IPO, all the key things to know about the IPO. Whether you want to subscribe or not, we leave that up to you. Back to Gaurav once again. He's standing by. Gaurav, any of the insurance players that you like on the technicals?
Well, many of the players or other listed players, something like HDFC Life, that gave a good breakout. We have seen a small retest sort of happening, and if it sustains above the levels of 560, I think among the listed players, HDFC Life is what is looking quite interesting, and one can play for target 600. But keep a tight stop loss of 560. We have seen a breakout. It made a retest, but if it turns out to be a failed breakout, then people can get stuck. So keep a stop loss of 560 and play for levels of 600 to 610.
Okay. All right. So back to some viewer queries then. Lots of questions trickling in. Manoj Kumar is writing to us about Axis Bank. He wants to know whether at the current level it's a buy or should one wait for further consolidation. 728 is where it's perched at, and you know, in the last 1 month, it's already down by about 7.5%. Do you see further downturn on this counter, or is it a good level to enter?
I'll just give it some more time. The price is not at the decisive level, so let it come near some more support area. At this stage, I would recommend to stay away for time being.
Okay, all right. Well, what about what about AMC stocks? We have a query from Imran Kaisar. He wants to know about mutual funds and AMC stocks. Any of these that you like that are likely to do well technically?
Well, the most interesting name or people generally want to hear about is HDFC AMC because it has not done much. It's been a value destructive mode for last few months. Beyond that, we don't have too much of data when we talk about Zibilla AMC. So at this stage, I would say wait. This is not the time to venture into these names because stick to the names which are outperforming already. Don't buy something because it has fallen. Something that has fallen so far can fall some more. The markets itself are not looking very robust. So in such instances, always go for names which are giving break, showing strong outperformance that can give you some money going ahead. Otherwise, you can get stuck in these names.
Lots of questions, Gaurav, coming in on Z Entertainment. Vatsal Modi has been writing to us. He wants to know what is your view there. Is the consolidation phase likely to continue? It's already fallen 15% in the last 1 month. Will this continue, the downtrend?
There are two different points. If you talk about consolidation, then yes, I'm expecting the consolidation to continue. But if you talk about downtrend, the stock is not in a downtrend. If you look at the daily or the weekly charts, it's forming higher high, higher lows. That's not the characteristic of a downtrend. So, in my opinion, at this stage, stay away. There's not much, I would say, triggers that one can be buying. And it declines towards the level of 220 would be more meaningful support for me. And one can try to buy certain quantity over there. But at this stage, I would say avoid.
You know, a small cap name that has been hogging a lot of limelight in the last 6 months has been Coffee Day Enterprises. Past 6 months, it's given 25% gains to its investors already. And we have a question as well coming in from Jami Prasant. He wants to know if he can buy Coffee Day at the current levels. He already owns 5,000 shares, which he bought at 51 rupees. Right now, Coffee Day is at 47 rupees. Gaurav, what's your view?
See, these kind of names, they do see a strong upside, but it's not just about the upside or downside. There has to be a proper trend, and getting an exit from these names becomes quite difficult at times. To answer a question, I'm not finding it very strong at this stage. It's trading below all the major moving averages, whether we're talking about 55, 89, 200. There's a small breakdown on daily charts as well to below 51. So in my opinion, be very careful. I would not recommend buying fresh over here. Keep a stop loss other for 42, 43 is where I see the next support coming in. You can use that as a stop loss. Below that, it can see some more plunge.
Okay. Another question coming in from Abhijit Roy. He wants to know your view on HDFC Bank. It's been a consistent wealth creator for many, many investors for many, many years now. But yes, in the recent past, the stock has been quite tepid. In fact, lost about 15% in the past 1 month itself. 1400 is the level that it's trading at right now. What's your reading?
I would recommend buying above levels of 14, 15, okay. 1415. For a simple reason, there will be a swing high on hourly charts. It would be trading above the major averages as well. I will keep it strictly for trading purpose on long-term charts. So if you look at daily or the weekly charts, then I will still give it some more time. But on hourly charts, if somebody wants to buy for 1 day, 2 day, 3 day, then keep a stop loss of 1385, buy above levels of 1415, and it can head towards 1450 kind of levels.
Okay. One more query coming in. This is from Rahul Kumawat. He wants to know your assessment of Adani Power. And, you know, power stocks have been quite a favorite for D Street investors. In 1 month, the stock has surged 32%. And a lot of these Adani companies have actually done well. But specifically for Adani Power, what would you like to tell Rahul?
Many of the people who want to have a view on Adani Power is for simple reason that they have missed out on the rally that you just spoke about. And that is not a good sign. If you want to chase now, it is going to be extremely difficult because we have seen a very strong upside, and any news or any developments would hit the stock more rather than push it higher. There is a strict stop loss of 270 if one wants to venture for risk takers. Keep a stop loss of 270. If this sustains, it can again head towards 300 levels. But I would not suggest buying it aggressively. Keep low quantity and keep a strict stop loss of 270.
Okay, great. Want to know what are the stocks that you are closely watching out for? Of course, there are a lot of queries coming in, but if you would want to recommend anything to our viewers, what would that be?
Shriram Transport Finance is one that is looking interesting. If you look at the daily or hourly charts, we've seen a breakout sort of coming in, a triangle breakout, and that is a very good sign. And it can head towards level of 1270, 1275. And there's a hurdle at levels of 1300 on a longer term frame. If that sustains, we can see strong outperformance coming from there as well. Indian Hotel is another name that is looking quite robust. In the entire fall and the entire volatility that we have seen in last few days, this has been a clear outperformer, one of the strongest hotel names, one of the strongest F&O names as well. 260 call option had a very strong rating. It's trading above those, it's even a close above those levels. So as long as these levels sustain, the next the rally can extend towards level of 270, 275. So it is also looking quite interesting. Another name that is looking robust is Rupa. We saw a very strong move coming on Monday's trade, but if you look at the daily or the weekly charts, we have seen a breakout coming in, and I don't expect this to fizzle out soon. We can see a very strong performance. It can head towards 650 as well. So these are a couple of just few of the names that are looking quite interesting. And as I mentioned, keep only the names which are either giving strong breakouts or showing strong relative outperformance on your radar, so that you have a higher chance of making money. Don't buy anything just because it has fallen 10, 15, 20%.
Okay. Well, thanks for sharing your picks with us. But Gaurav, just before we let you go, one quick question. What is your assessment? How is market likely to play out in the next few weeks? Because this week, definitely a big event will be the FOMC outcome. 0.5 percentage point rate hike is what the street has already factored in. But how do you think things are likely to play out on the technicals? What are the levels that our viewers should keep on their mind when it comes to trading with the benchmark?
So the key support areas are 16,850, from where we have seen bounces on 2 or 3 occasions, and those have been very interesting bounces. It is also the level where the 200 exponential moving average is placed. On the other hand, 17,250 is something that has to be conquered. Nifty has to give a close above these levels for a higher upside, because 55 and 89 exponential moving average is placed over there. It's going to be highly volatile going ahead, and it's going to be range bound. Don't try to preempt a breakout of this range. Play according to this range, and if there's a sustainability of its closing above 17,250, then a move towards 17,450, 17,500 would be very much possible. So wait for a breakout either below 16,850 or above 17,250. Till then, play for this range.
Okay, point taken. I hope our viewers have also taken note of that. Gaurav, thank you so much once again for joining in and for chatting with us about a host of sectors and stocks. And thank you to our viewers for tuning in. We'll be back tomorrow at 8:30 a.m. once again with all the stocks to keep on your radar and your queries. Right now, it's time for Markets with Santo and CJ. Coming up next, so stay tuned.